Let me kick things off. So, good evening, everyone. Welcome to the fifth session of Capital Conviction webinar. I'm Sabrish Menon, Managing Principal at Phenomenon Investments. I appreciate you spending your Tuesday evening with us. We started this series with a very simple goal to make important financial decisions clearer and easier to navigate, especially those connected to career and investing. Each session explores one central idea: how to allocate your capital wisely. That includes your money, your time, energy, and skills. Whether you're building for long-term wealth, creating future income streams, or just sharpening the way you think about making your decisions relating to your career and investing, the objective is the same: provide clear thinking and help decide confidently with conviction. For those of you who don't know Phenomenon, we are a fee-only registered investment advisor based here in Kirkland, Washington. We are built on a simple principle of transparency and client obsession, and we serve corporate managers and executives as a family office and cover all of the big tech within the Seattle region. Now, I'm thrilled to welcome our guest today, Will Poole. Will is the co-founder and managing partner of Capria Ventures, where he invests in technology companies across the global south and serves as the firm's chief AI evangelist. He brings more than 3 decades of experience across entrepreneurship, big tech leadership, and global venture investing, having invested through multiple technology cycles, including the downturns of 2000 and 2008. Earlier in his career, Will was a corporate vice president at Microsoft, and he's also the co-author of Flourishing with AI, which explores how individuals and organizations can build resilience in the age of AI, something that we're going to cover and talk about today. So in the next few, maybe 10 or 15 minutes, Will help us think how AI-driven capital cycles intersect with career durability, particularly with technology professionals whose income, wealth, and human capital are deeply tied to the same ecosystem. After Will's presentation, we will jump into a Q&A and an interaction, and we will start taking questions from the audience. With that, I will pass it over to Will. Thank you.
Thanks, Shabrish. It's a pleasure to be here. And let me share my screen and see if we can go there. Can you see that okay?
Yes, we can see it.
We're good. Okay, great. So as you mentioned, one of my core interests is not just investing, but also thinking about how AI impacts investing and how AI impacts people's careers. And I'm writing a book on that topic along with my longtime friend and collaborator, Ravi Venkatesan, who is the former head of chairman of Microsoft in India. And so he and I have been having lots of interesting conversations about that topic. Let me start with an observation that history doesn't repeat, but often rhymes, as said by Mark Twain, which is really saying that while the actual actions in new aspects of current events may not be exactly the same as history, they have many similarities. And in researching our book, one of the interesting topics was looking at the railway buildup, which had in the late 1800s, which had a lot of similarities to what we're seeing in AI today. There was a massive belief in the excitement around new technology and actually a amount of borrowing to put down infrastructure, which is tracks, and to buy equipment long before any actual productivity or commercial gain could be achieved. And that's not dissimilar to what's happening in AI today. The amount of money going into it and the lack of demonstration of productivity at scale and return on investment for sure has many parallels. I happen to have invested and led through the .com and telecom bust, and also dealt with the 2008. I think many people have actually been close enough to those. So I don't need to talk too much about that, but there's a lot of lessons to be learned from history and to think about how we invest and how we think about spending our time and our career. Now, before I get into this, I think many of you have probably seen the Gartner hype cycle of I think 1995. This came out, and you might think that if you follow the hype cycle, we've already passed the peak of inflated expectations, where maybe the correction of 2 days ago or whenever the last one you saw was, you think that we're on the down slope, and then soon we're going to move out of that trough of disillusionment into the plateau of productivity. But I actually have a different take on this hype cycle, and it goes like this. It's not a single cycle. It's actually a set of oscillating uh, hype cycles up and disillusionment down. They will have varying amplitudes, and you basically have no idea where we are in that cycle. And I think this is the reality that we're all living. We see one report that tells us everything is amazing and we should be investing more, and the AI stocks go up and Mag 7 hits new highs, and we see another report that says that there's no productivity gains, or another report that says, hey, there's might be entirely all white collar jobs are going to be lost in 18 months, and people go down the cycle and we sell off. So I think it's going to take a while for this to stabilize. So part of the conversation today is around how do you think about that? How do you navigate that, both from an investing perspective and from a career perspective? So I wrote a piece about going on 4 months ago about the bubble and talking about what it is that might cause the bubble to burst. And because I thought that not enough people had looked at this. There's just a lot of craziness happening from my view from a investing fundamentals perspective. It still is, by the way, to this day. And it's something that I think that people need to think harder about what might the leading indicators of a bubble burst be. And so I just wanted to repeat those briefly because these are ones I believed then and I still believe now are actually largely potential impacts on the valuations of public stocks and or the willingness of private investors to invest in the venture capital stratospheric prices that they have been. The three points here. One was algorithmic efficiency, and this started back, I think, January of last year of 2025. When DeepSeek burst onto the scene, and everybody knows the market took a big dive and then came back over the following couple of weeks. But what that was, the reason why everybody got so hot and bothered about that was they said, hey, dramatically lower costs of training, even lower costs of inferencing, and that's going to change everything. Well, it didn't actually change everything right away. It caused the foundation labs to lower the prices a bit, but fundamentally, it hasn't really changed the market dramatically. And I think there's still a potential for further breakthroughs in this space. DeepSeek did come out with a new one, I think, in October, November. It got another step function of reduced costs. It didn't have as much of an impact, but they're chipping away, and open source is chipping away. And if you look at the leading sites that look at the quality of new models, you see that the majority of models that people are playing with are now actually not made in the US. So there's a diversification of model development that's happening, and that's really going to impact, I think, the infrastructure that people have been spending money on in the US in particular. The second one is, and I think this year we're going to start to see this in 2026, is enterprises looking at the fact that the foundation models that are both expensive to run, that have their challenges around hallucination and so on. They're obviously getting better every release, but are they the right answer to enterprise level quality? And I think we're going to start to see the growth of small and medium language models. And so, if you're running an enterprise and in financial services and you need your model to give you accurate information, you don't need that same model to be able to pass the entrance exam to medical school or to law school. You need it to give you accurate information. And so I think and that's actually possible and within realm of technologies that are being built today and starting to being deployed today. And as that happens, we're going to see more and more of an impact on the prospects of revenue coming from enterprise for the large foundation labs. The final and maybe even the most important thing is this disconnect, and this is happening even more now than it was 3 or 4 months ago, between the reality of capital expense and the potential of revenue to be generated by the capital that's going into infrastructure. And I'm sure many of you read about this, and it will continue to be a hot button. I think Microsoft got hammered just a couple of weeks ago because of in their earnings call, people were not seeing enough revenue coming from the massive spend, and so I think others are going to be challenged by this as the market starts to say that we can't see where the return on investment is. We're going to punish those who aren't investing wisely. So those are the three things I talked about going 3, 4 months ago. But I wanted to bring up two more that are just happened in the last couple of weeks. This guy, Matt Schumer, that's not his actual picture, that's an AI generation of it, wrote a blog called Something Big is Happening. And I think it got somewhere between 50 and 80 million views pretty quickly, basically saying that, oh, the world is changing under our feet, and I, as a developer, am no longer, my job is no longer secure. And he goes on for a long time and cites lots of knowledge of what sound like very knowledgeable, important things that are happening. Similarly, just a couple days ago, Citrini Research came out with this, I guess, fictional view from the future of what might have happened over the previous 3 years between 2006, 7, and 2028, or 2026, 2028. And it's very well written, and it's very scary. And it's got a lot of people worried. And again, it's allegedly impacted some of the sell-off we saw just the other day. Now, I think that you also have to look closer, though, and it's really important to, when you read something like the Matt Schumer blog, the facts that he quotes aren't always all the facts. And one of my favorite commentators on the AI world is Gary Marcus, and go read Gary Marcus's takedown of Schumer. He points out to studies that Schumer says that are literally are incorrect and or incorrectly interpreted. So there's a lot of importance to reading between the lines, understanding what the reality is. Same thing for the Citrini thing. Again, it is a scenario that you could imagine, but there's also lots of hardcore research that says that this isn't happening right now, and it isn't going to happen for a long time. So reader beware is my key point relative to things that might cause bubble bursts. Now, famous quote from Warren Buffett. You've all read this before. The question is, who is it that's going to be in good shape when the bubble bursts? And we look at three different areas that I think are going to be strong. One is verticalized providers and the people that build the small and medium language models. I think the development of true value that can be deployed in the enterprise with accurate results that's going to increase productivity. It is starting to happen. We are actually investing in some companies that do this today. There are plenty more that are doing it around the world, both incumbents as well as startups. And those companies, I think, will actually benefit from a bubble burst because prices will go down for them. The second will be, those that are building existing SaaS vendors and others who are going to build AI into their offers and make it actually work. And that means taking existing workflows and optimizing them with AI. That means building things that, again, the return on investment and productivity can be seen and quantified fast enough that the CIOs and CFOs can work together to make good decisions and actually spend money. The final place where, despite the crazy amount of money that's being spent by the likes of Amazon and Microsoft and Oracle and others, and Google, that they're fundamentally going to be okay. They're printing money in their cloud businesses, and while Microsoft got hammered the other day, they fundamentally, I think, will adjust their stance. And when the bubble bursts, they're going to be able to pick up the pieces, get a lot of stuff on the cheap, and continue to fund it with their existing businesses. So I do think there'll be some winners that will happen that will emerge from a bubble burst. Now, the other question you'd say is where else, if you can invest in companies like that in the U.S. that might be winners in this time of turbulence. You also could look offshore, and this is certainly a place that we at Capria look in the global South broadly. We're particularly focused on India these days. We think that there's great opportunity for digitization and value creation in India on many different fronts, irrespective of what's happening with the volatility in the U.S. market and the tech stock buildup. I wrote a piece that got published almost 3 years ago in Economic Times saying that India has the most to gain and the most to lose from generative AI. And you can Google that and go read it. But I still believe what I said then today, that there's great opportunity there, and that there's smart companies, both small and large, that will take advantage of this. Again, there will be disruption. There will be some losers for sure, but overall, the potentials are quite strong. I was a speaker at the AI Impact Summit in Delhi last week. It was a bit of a zoo, as you can see in this room here. I think it had seating for 100, and there are 120 people in it or so. But there were 15 of them running in parallel. But I and others were talking about the opportunity for AI to effectively distribute uh, capability and opportunity broadly in the entirety of India, aka Bharat, and that's going to be an equalizer and allowing entrepreneurship and innovation to flourish and bloom in places where it couldn't before. So again, I think great opportunities, global South, India, for AI. Getting to the book I'm writing, um, the real fundamental observation that my co-author Ravi and I had is that in our travels around the world, people are not embracing AI quickly enough. While you can find pockets of substantial use, and there are plenty of anecdotal and actual hard research reports talking about it, if you look broadly, there's many people that are and companies that are not benefiting from AI as much as they could today, even with the challenges that AI deployments have. There's still lots of value there. And we also think that from a individual perspective, that those who are not getting ahead of the game are at risk in their career. And that's why we working on this book. You can see more about it at flourishingwith.ai. There's also a chat bot available to talk to the draft manuscript of our book. But a few points that we're going to make, and I make them really from a optimistic perspective, because I think that jobs are not going to disappear in the entirety. Some of the doomsday scenarios of white collar opportunities being wiped out and replaced in the entirety, I just don't believe that's there. I think that the people are saying that they're eliminating jobs because of AI are more driven by the current macro and or driven by people trying to cover their ass, if you will, by reducing staff a bit. But overall, the data do not show white collar jobs disappearing today. But however, I think from a career perspective, everybody needs to really think about how it is in fact changing hiring, how it's changing the nature of work. And a couple of core points there. One is that your deep knowledge in a particular area is probably less valuable to you today than it was 2 years ago, because again, AI can develop and apply that deep knowledge just like many people can. And so, from an individual perspective, soft skills are getting to be more important than ever. The entrepreneurial mindset you bring to work, I'm not saying to be an entrepreneur, but simply to think entrepreneurially about creating opportunity within an organization, to bring creativity and exercise creativity in everything you do, to learn how to be resilient and to deal with the fact that, hey, things might change. AI might take away some opportunity you thought you had, being able to bounce back and step into a new area and still succeed. There's a guy named Epstein, not the bad Epstein, but the good Epstein, wrote a book called Range, and he really talks about how being a generalist is going to be increasingly valuable in a world where the specific deep depths of technology and other knowledge that AI can exercise cannot be done by the AI on a generalist basis. So humans developing range is going to be more valuable. Final thing we talk about in the book is the importance for leaders of thinking about AI not as a change management problem, but as a change management problem, not as an IT project. The MIT study that talked about all the things that failed, those I think were basically IT projects that failed, where they did not have good leadership and good thinking about what does it take to drive change management across an organization, getting people to believe in what you're doing and to embrace it. Now, all that said, there are a couple of X factors that I want to just bring up briefly, and then we'll go to Q&A. One is this idea of sort of recursive improvement of AI. And if you think about, AI model generating code that supports and improves the model, then humans look at that, give feedback, direct it, generates more code, the model gets better. This recursive improvement is happening today. OpenAI talks about it, Anthropic talks about it, and there's always human input though. The real thing that's going to change everything is in the event that the human input is no longer needed. This would be the AI actually does the evaluation and the planning, and then it generates more code. Then the model gets better, then AI does that, and it continues. Nobody is doing this today. There's a couple of companies that have been funded pretty heavily to try to do this. Nobody knows when this can happen, but if this does happen, that you can invest money and have an AI recursively improve itself, then many of the things we talked about are going to change much more rapidly than the current trajectory. Now, here's the thing that will give you a little bit of confidence that it's not going to happen right away. This is a look at the accuracy, the reliability of agentic models, and they're improving on a slow linear scale. So it's going to be a while before the accuracy is good enough that you could imagine letting a thing run by itself and not have humans in the loop to correct it along the way. So in closing, for the likely rhyming history that we're all going to see unfolding in front of us, my real view is for portfolio management, diversification. My company was acquired just prior in the mid 90s, just prior to by Microsoft, just prior to the dot-com bomb. And I had done some diversification, but in history, in retrospect, I should have listened to my advisors, people like Shabrish, and done more diversification. So I think diversification is good for your portfolio. For career, developing range, becoming a generalist earlier than you might think, becoming somebody who can lead, communicate well, sell, all those things that are help you operate in different roles in different places. These are all going to really benefit you in your portfolio of life and financial return. So with that, let me stop sharing my screen and go over to questions.
Yes,
there we go.
Thank you, Will. That's really insightful. Really loved it. So just a reminder to everybody, you are able to put your questions in the Q&A. If you are having trouble, I see that some people were having trouble accessing it. You're also able to raise your hand or just put it in the chat box. But yes, Will, thanks again for sharing. Some of the slides were very intriguing. I really like the way that you had laid out the Gartner hype cycle. And maybe that's probably a good place to start in terms of a peak of inflated expectations versus the plateau of productivity. And it's very timely that you brought this Citron research, because I think it's been especially kind of floating around in the corporate circles. So maybe just to kind of get a little bit more perspective on the bubble part of things, right? You have lived through 2000 and 2008. And when you hear about the world today, what is going in your mind in terms of how should we be thinking about bubbles? And DeepSeek caused a very major volatility event for NVIDIA when we saw that event. And then recently we have seen the same volatility with the SaaS stocks. So just kind of getting your perspective in terms of where are we in relation to that cycle?
Well, I mean, first of all, I generated that graph using Claude 4.6, and it took me 2 tries, and it came out exactly the way I wanted it after the second try. And I tried that with a couple of other models, and it couldn't even generate it. So the models get better every day. But I think that relative to where we are, my point that we are here, nobody really knows. I think anybody that claims they can tell you where we exactly are, I think is not really bringing the perspective both of history and technology to bear. So I think you have to prepare as both from a career perspective and an investing perspective. You got to prepare for multiple cycles yet to come. The pace of change is just too fast for anybody to say they know when. For example, we just don't know when AGI is going to happen, right? There's people who've been claiming that for years, and it hasn't happened. The same way that Elon Musk has claimed that my car would be driving itself since I bought it, not long after 2013. So it's been, more than 12 plus years that I've had a car that's supposed to be self-driving that isn't going to be self-driving anytime soon. So I think from where we are in the bubble burst, it's going to happen. It has to. in my opinion, just based on the circular dealing, the lack of alignment on the ROI, that third point that I made. But that could take another year. It could take longer. It could be literally next week. So I'm not a market timing guy, but I am quite certain that it has to happen.
Right. That makes sense. And every cycle feels unique when you're in it. But from your vantage point, do you see anything similarities in terms of the underpinnings between how you saw the dot-com era and other hype cycles?
Yeah, that's actually and this is an important point. One is that um, the dot-com hype cycle, there wasn't in the early days of that, there really wasn't any actual revenue being generated, right? It was all circular or non-existent, and it was the quote eyeball economy, and that's just not the case today. There are companies that are delivering actual value, and that value companies are willing to pay for it, and that value will only increase with time. So I do think that the overinflation is there, but and the people that are investing in it are not stupid. They know that there's value that they can be. I think they're ahead of themselves, but I think they see the value is there, and so I think that's one difference for sure. Um, but I do think that the point on the railroad example of just massive capital expense without a thought of or a realistic view of when that capital can be have a return on investment, that's a real problem. And I don't understand how people are justifying this. And again, the market punished Microsoft just recently for not being able to justify that. I think that we're going to see more of that happening.
I see some questions coming in, so I'm going to take one from the audience. Sumili Sen, she asks, how big of a problem to diversification is with the indices, like the S&P 500, is being imbalanced and some inflated valuations of the Magnificent Seven. I think you brought up that point in your slide too, Will.
Yeah. That's a very valid concern, and I would think about when you think about diversification, I think you need to think about industry level diversification and really and looking what's inside the indexes that you're in, and they are, as you said, very heavily overweighted with the Mag 7 right now, and obviously the growth last year was heavily weighted with Mag 7 prior to the recent correction. So. I would look at both U.S. and international, and I'm an unabashed proponent of global South investing, whether it's private or public. If it's public, be careful. But I think that the global South has more to gain broadly, not just India, but the global South overall. You can pick your favorite country, but I think that the diversification into global South assets is a decent hedge, because I think that to the extent that there is a white collar job destruction, like what Citron Research proposes, that's dramatic, that's not going to hit the global South the way it hits the global North. So I think about diversification both sectorally within the US market and geographically.
That makes sense. Thank you. Another question from Mudit. In this cycle of high percentage of capex, what kind of return on capital employed can we expect in the next 12 to 24 months? I think this question is a little bit more, I think, just given the capex announcement, I think almost $1 trillion worth of capex announcement has been made, and they are in fact getting punished for it. Even with Amazon, we saw that it was 15% down.
Yep.
So with massive capital deployments in data centers, GPU, and the infrastructure, the ROI is really the question in terms of the monetization and what runway do we see that. So any thoughts there?
Well,
seems like
here
12 to
again,
24 months seems like a short runway.
it is too short. But let me again, I think history is important. So look at what in .com, there were two things that happened, right? One was .com stocks themselves, and the other was the telecom meltdown, 12 or 18 months later. And how long did it take for there to be a return on all that dark fiber that was laid? It probably took another 5 or 10 years, and I'm not a student of that specifically. But all the the companies that were investing huge amounts of money and laying that fiber that was not getting used ultimately benefited globalization. It benefited India dramatically. It benefited all of the places where we have the labor arbitrage made possible by virtually free telecom. So I do think that the return on investment may not come to those who've made the investment, though. That's my point of where the hyperscalers they've got the cash to withstand the downturn, and they'll be able to buy some of the pieces when others who don't have the staying power. And it will take time, and it'll probably take a longer time than those GPUs' life. And that's one of the other problems. They're all looking at 6+ year amortization schedules on GPUs that are potentially obsoleted in 2 to 3 years. So I think that's another issue that gets cited less frequently than it should be.
Yes, those accounting shenanigans. So if we strip away, some of these headlines in terms of the AI hype, you said the global south for sure, but any specific verticals or applications within the AI stack that is interesting for you in the emerging market basket?
Well, I think one I would call it, it's not industry specific, but the whole idea of vertical AI, right? Of building, Microsoft came up with the idea of copilots a number of years ago, and you can just think of that as the broad concept. But building things that are looking at a combination of human plus AI automation to deliver visible return on investment, probably in pretty short order. And there's many companies doing this in both developed and developing economies. But I think that the vertical is more important. If you look at horizontal, if you look at just general tools, I think that's going to be a bloodbath. I think that the foundation model providers are going to continue to, as the tide goes up, right, their capabilities are going to keep going up and up. They're going to be looking for revenue. They're going to go and take revenue. All the low-hanging fruit they're going to grab. They will grab. And so that'll be the things that sit closest to the models. So I think, again, that's going to be a bloodbath, and we have seen this in previous markets. So vertical AI is less likely to be impacted there. And vertical AI is also more likely to be easily demonstrated return on investment for a company to make money there. I think in the consumer space, there actually is money to be made. And this is not a space that we invest, but you see OpenAI going there. Their revenue is driven dramatically by consumer right now. But whether it's entertainment or other services that provide value to consumers, as in healthcare, for consumer healthcare, lifestyle. I talked to a friend who's a former senior exec in Microsoft in gaming, and he said every startup he looks at is going deep into AI to support the gaming side of the world. So I think AI in particular areas that it can increase the experience, increase the value. I think those are places where there's return to be had.
That makes sense. I'm going to switch gears a little bit to talk about a little bit on the career side, especially we have a lot of people who are coming here. So a lot of people in the tech scene, right? They have a lot of exposure when it comes to their jobs. Oftentimes we see, both spouses are in the similar industry or even same jobs with the same company, and they have stock compensations, their brokerage portfolios, the index we just spoke about, the tilt towards the technology sector, disproportionate earnings. So everything seems to be very concentrated and exposed on the tech side from a career and investing standpoint. And I think what we would call as total exposure. So is there any ideas that you have in terms of how do people think about such strong correlation when it comes to the amount of risk that is available and that they're taking, career and capital?
Yeah, I think it's hard to tell people, well, don't have all of your both career and financial eggs in one basket, because they tend to come that way, right? For obvious reasons. And I certainly, made my money that way over many years earlier in my career, and as I'm sure many of your clients and listeners and viewers as well. I think that the thing to think about is a bit of diversification on the career side. So to my point earlier around saying, if you're a deep technologist in a particular area, you're at much higher risk than if you have either knowledge in a number of areas or becoming or on the path to becoming more of a generalist. So this idea of developing range, I think, is a way to have similar diversification. And you have to invest in it, by the way. This is not something that it's not a obvious career progression for everybody. And for many people, just the going deeper and deeper is the way that they will pursue, particularly if you're an engineer. That's what you like to do. I'm a trained engineer. I love to do that as well. But I sort of forced myself to be more of a generalist. And I realized that actually my value increased in my career as a result of being a generalist, of having that kind of range. And so I do think that it's an area where you have to make an intentional set of actions that you take over time. You have to hold yourself accountable to doing that. And the return might not be immediate at all. It will probably prepare you for advancement within your organization more quickly, but it'll particularly prepare you because it'll give you more resilience in the face of either an impact to your job no longer being as relevant or your company not doing as well. You'll have more opportunities to move to other companies because you have more range and of capability and knowledge. So that's effectively an investment in yourself and your career that I would encourage everybody to make.
Yeah, I like that. I think you mentioned it in your presentation about, being likable, and you have skills where you are able to bring people together, negotiate. A lot of the intangible soft skills really kind of puts an edge in terms of what humans can do. And I
And
believe,
engineers by nature don't have those, by the way. Okay, right? I mean,
yeah,
it's the rare deep tech talent that actually also develops that. And I was at Microsoft as a senior leader when we created the idea of dual career paths to be both a deep technologist without having to be a manager, and you could be just as successful there as being on the managerial career path. So, but I think that the deep tech career path it's more hazardous, frankly, in a world where deep tech knowledge and capabilities can be obtained and exercised by AI more often than not.
yes. And we have a few more questions. I think people had follow-ups. So Samili is asking about a follow-up on her question. Can you give specific example of a development range for, let's say, somebody who's an engineer in tech today? Is there any specific examples in terms of that development? Uh,
Sure. Well, the obvious one is one of our new LPs, who's ex Microsoft, ex Meta. He was a back end guy for many years of his career, and then he went to front end, and he's went to learn how say, hey, how can I be as good at dealing with small number of pixels on a screen that are used by lots of people as I am at figuring out how to, get servers to be running at massive scale. And that was not an easy thing to do, right? To be good at both. And most engineering leaders or individual strong contributors are not good at both. And he made that decision. I think it served him well in his career. So you can pick what the adjacency is, or in the case of front end versus back end, that's a dramatically different world. That's one place. Another is just saying I want to invest in literally being good at as a manager or team leader of AIs, right? I want to learn how to employ AI agents more quickly than everybody else is doing. I want to be in the cutting edge of that. So even if my job today doesn't require it, even if my company's maybe being slow at doing that, I'm going to go and do side projects and figure that out. I'm going to go and stand up OpenCloud and get my little agent farm working for me and being able to show that to people. I learned how to do that myself and did something interesting with that. Pick whatever the thing du jour is and learn about it ahead of the pack. The off-cited comment of you will not be replaced by an AI, but you can be replaced by somebody using an AI is as true as when that first was said today as it is today. You need to go and learn how to use the AIs yourself ahead of the pack. And that will help you build, and in different areas, that will help you build resilience from a career perspective and I think strength in growing the path you're on.
yes, that's very valuable. Thank you. Okay, so one question from Manish. Could you shed some light on the general ideas of flourishing with AI, specifically for people early in their career, where they specialize in a hard skill such as software engineering? That's a question from Manish. And I do know you talk about resilience and adaptability in the
Yeah, no,
book.
it's an interesting problem for somebody early in career, and we actually originally didn't we wrote our book for mid-career professionals, and we realized that early career was it maybe at more risk than mid-career. So I've done a lot of talking to people about that. I've talked to hiring managers at BCG and McKinsey. I've talked to hiring managers at people at head of talent services at major law firms. And I'd say there's two things that are I see as trends. One is people are going to be expected to become managers more quickly, much more quickly, right? It used to be you'd come into an entry level job, you'd expect you could be in that job as an individual contributor for 2 to 5 years before you might be a project lead or ultimately a manager. Well, now you're potentially going to be a manager in year one of yourself plus agents, right? And frankly, working with agents is not that dissimilar than working with people in the sense you've got to divide up your tasks, you've got to figure out how to break down hard problems, how to define what success metrics are, and how to actually measure those who are accomplishing them, whether they're humans or agents, against your goals. So I think that the skills involved in management, project management, team management, of problem solving at that level, you have to accelerate your journey in that dramatically. That's number one. Number two is I thought I had a thesis that, for example, in consulting, that there'd be much less hiring at the entry level. And they said, no, we're still hiring entry level, but we're hiring people that actually have domain expertise. And at scale, they're still hiring that. And they're saying they have to both have domain expertise, they have to have been in the industry for some time, and they have to be really good at AI, better than their clients. So so I think that you can apply this pretty much anywhere, saying, you're early in career, build deep expertise, build range, and build the ability to use AI. And you say, that sounds really hard. Well, it is. And I think that the world really has gotten harder for entry level people, and you're competing with others who are doing the same. So I do think that it means you're going to be spending more time nights and weekends learning these areas that may not be presented to you in your exact day job, but that you need to build in order to excel at that job and or to take the next job.
Yep. And I think with AI, the barrier to entry in terms of any skill that one wants to acquire has at least lowered, if not eliminated. And I've heard a lot of common things between friends in terms of, hey, I'm now starting an app and they're learning to code, and I think they're able to fast track that in terms of whatever ideas they had and execute on it.
Well, and as you're able to, and I'd argue you must do it literally,
Mm,
because if you don't, you will be replaced by somebody who does. And I mean that
yes.
sounds harsh, but that's the world that we live in, and it's just like saying, could you get a job having no computer skills, basic word processing and spreadsheets and sort of fundamental IT literacy? Could you get a job today? The answer, of course not. Well, having fundamental AI literacy that's more than just how do I type a prompt into Claude is a requirement. And you have to be ready to reinvent yourself on a regular basis, right? You have to be continually seeing what's coming along, saying, hey, I knew this 3 months ago and it's no longer relevant because there's other thing that's much better. I got to go learn that. So I do think that the pace of change is unquestionably unprecedented for everybody, and therefore you have to be willing to operate at that pace of change in order to be strong in your career.
Yes. I have one last question. I don't see any new ones from the audience, so this is the last question that I have. Sorry, we have one more, so maybe let me take that first.
Okay.
So that's from Midith. Sorry, this is blocking my view. Okay, barrier to entry or acquiring skills regarding that. How relevant would traditional college degrees be in the coming years, in your opinion?
That's a matter of a lot of debate, as I'm sure you've read. Um, I think it depends on what degree you're talking about, and what college you're talking about. If the college is teaching you very narrow, particular technical skills only, I think that that is going to be less valuable. If the college is
Mm.
teaching you how to think broadly, how to be a problem solver, unleashing your creativity, teaching you how to work with other people, all those soft skills that I mentioned earlier, and I go into a lot of depth in this in the book, so I encourage people to go and play with my chatbot there, and see that. But I think if your college is giving you those experiences, is giving you life experiences, is teaching you resilience, is teaching you about different cultures, different kinds of people, different ways of thinking about things, then that college degree is going to be valuable. So I think that's, and frankly, some schools you can seek out that broader set of experiences, and some schools force those broader set of experiences, and other ones will let you simply be very, very narrow and deep, or that's maybe all they offer. So that's the way I would judge this. And I've actually talked to a lot of parents who are thinking about, where do they want to be sending their college age kids and how they want to be, guiding them. And that's one of the conversations that I've had with many people, is to think about that range of skills and experiences that college, or or even secondary education afterwards can give you, that you would not get, or you might not take avail of otherwise.
Thanks for sharing that. Well, I see another question from Sumili. Uh, how to save your focus capital in this age of context switching demand? I don't know if that gives you perspective, or I can ask to expand.
No, I got the gist of that.
Okay.
I it's actually, it's hard for me to fathom sometimes when you look at the TikTok generation,
Mm.
who just, it's very hard for people that have grown up in that, rapid fire world to, how do you focus? It's right. It's challenging, at least for old folk like me, it's challenging. So I think that the answer is discipline, frankly. I don't know
Mm.
any other way to say it. Is you need to say, hey, I'm going to close off all other inputs and focus on this task that I want to get done over this period of time until I achieve this objective. And if you do not apply that discipline, then you will be torn in all these different directions by the task switching craziness that's there. Even once you start focusing on that task, there's all the different rabbit holes that you can jump down that can, take you away from the task. So I think that discipline, and then also constant reevaluation of yourself. Did I said what I want to do. I applied what I thought was good discipline to do that. I focused. At the end of that time, did I achieve what I thought I wanted to achieve? And holding yourself accountable for that. So that I say discipline and accountability are the things to think about, as you try to form your investment in your career and yourself.
Yes, that makes sense. Thank you, Sumili, for asking that question. Okay, so I'm going to move to the last one. So I think in general, just to kind of, in terms of the investing angle, just bringing it all together, well, if the productivity gains, as we spoke about, turns out to be even real, even without the profits, right? Where do you think ultimately will be the economic surplus that is going to lie? Is this for employees in terms of productivity boost? Is it with investors and shareholders, or is it with somebody else?
Well, let me start by prefacing my answer with, I'm an entrepreneur and a hopeless optimist. That's the perspective, and I'm a glass half full guy, at all times, and that's the way I think about things. So while it's easy to dwell on the downsides of all these areas, there are many, many upsides, and I think the simplest one is to think about the fact that the explosion of capability is going to make it more possible and lower cost, and quicker to get things done than ever before by some factor orders of magnitude, right? And this is already starting to happen. But if it means that, problems that previously were not economic to go after, you can go after them because
Mhm.
somebody can vibe code the thing up, and go after it, and get it done. It means that new businesses are going to get created in new parts of the world that previously were just simply cost prohibitive to create that business. And so the friction has gone down for creation. The friction for operating is going down. So reduction of friction is going to mean that opportunity is created and therefore profits can be created. In the venture capital world, we look at the fact that, what does it cost me when I made investments back, angel investments back in the early 2000s, actually, or even my first startup in the early 90s, we spent a lot of money on hardware, right? Because this is before the days of cloud, before the days of even so we had hardware sitting in our, had to buy the air conditioning and the hardware. Well, you don't have to buy any of that anymore, right? So that's long gone. So, and that was very, very expensive. You had to raise piles of money for capital expense, all gone. So the fact that you can actually have a handful of people with a small amount of money can create a positive, EBITDA positive company within a year. That was never possible even 3 or 4 years ago, right? And that's now possible today. So I think that in terms of value creation and value capture, you have to think about this, where are companies taking advantage of this quickly? Where are they taking advantage of the fact that they can deliver more valuable services more quickly for less money and get paid well for it? I think the answer is broad and deep, and so there's plenty of opportunities to find that, but don't get caught up with the shiny objects, the really shiny objects that look super exciting, but you got to look under the covers and say, is there a real business coming out of that? Is the money being spent there going to have an ROI? And that's what I'd focus on is real fundamentals that can be developed more quickly, more cheaply than ever before.
Yes, that's right. And I think I noted when you said before about vertical AI ideas, AI embedding in terms of workflow improvements, and then incremental productivity. So yes, that makes total sense. Great. So I don't see any more questions, so we're going to wrap it up with that. So thank you everyone for being a part of this conversation today. And Will, thank you. It's been really, insightful to be hearing you. Will is a leading voice, and he's on LinkedIn. So if you want to connect with him, follow him. He's available. We will publish the recording, which will be available later as a part of the email communication. But thank you again for joining us today, and all of you have a pleasant evening.
Thanks for having me. I enjoyed it. Thank you very much. Bye.
Thank you.